Good evening. It's Saturday, March 18th. My name is Dave Coker, and this is Talking About Finance. And you know, guys, I love these moments when we can speak freely, ignoring the chaos in the markets, refusing to get caught up in the emotions, in the excitement, in the negative energy, the lies propagated by our politicians, the media, or sellers of courses, newsletters, ebooks, pamphlets, all that purport to teach you how to be free financially. All this garbage, we ignore the noise, we focus on the signal, and we find the value. Buying dividend-paying stocks, coupon-paying bonds, property that pays us rent. We aspire to achieve financial independence in a profoundly simple and effective way. Generate cash flow, get paid, that's all there is to it. Use that money to buy more cash flow generating assets. It's an incredibly powerful system. It's an incredibly simple system. It's a system those on Wall Street and the City of London don't want you to know about. You're already masters of this system without paying anybody any money. You know what you have to do. So get rich slowly, guys. And while you're getting rich, we're going to talk about finance. Last week, the S&P 500 closed up 1.43%. Four sectors: communication services, information technology, utilities, and consumer discretionary, all outperformed the index. Seven sectors underperformed the index, specifically healthcare, consumer staples, real estate, industrials, materials, financials, and energy. And look at energy burn off. Oh my gosh. It was a crazy week, guys. And I'm getting a 2007, 2008 vibe from all this chaotic action. But again, it's encouraging. With all the surprises and at times outright chaos and confusion. We didn't see a total meltdown again. That's 2 weeks in a row. Oh my God. Got to thank the Lord for that one. The VIX traded up to 25.51. It closed last week at 2480. Even though during the week it rose as high as 26.5, it still isn't showing anything other than what I would call complacency. So until we see a VIX closer to 40, we really can't call an end to any bear market. The 10-year note closed the week at 3.41%. It's down about 0.3% week on week, down about 0.5% year to date. Over the past 4 months or so, the 10-year does seem to be range-bound. So that's very curious. Oil closed the week at 66.17, down about 13.7% on the week, a massive drop. And now it's down about 17.6% year to date. So guys, there's a school of thought I subscribe to which says fortunes can be made during periods of chaos, like we saw last week. Now these days, and for a long period of time, I never use my own money to acquire stocks. Rather, I invest monthly dividends into more shares. But I do have liquidity and I'm considering my options. If we see further meltdowns, I'm likely to pour some of my own money into the markets. Oh, and I'm so darn boring, I'll tell you. Because yesterday was Friday, and of course, I bought Bitcoin and Ripple because that's just what one does on a Friday. Am I right? I buy crypto and I ain't selling. But since you guys already know I'm boring, you know what I do. I buy stocks, I buy property, I buy bullion, I buy crypto, I buy exchange-traded funds, I buy coupon-paying bonds. I already got everything I want. I already got everything I need. So what else am I going to do with the cash? You can't leave it in the bank, not at the ridiculously low interest rates that they're giving us. And I can't give it to you, can I? Oh, look at those DMs light up. Oh my God. Perish the thought I'd give you money. Although if you come to town, I'll float you a drunk. So let me know. I'll ditch my wife. We'll go out and get out about and have a good time. So let's see what me and my buddies, about 50 or so money freaks, with our fingers deep into the markets, deep into the banks, deep into the brokers. What do we talk about all week on a private Telegram channel? As you know, my friends, we call it Global Wall Street. And we are absolutely everywhere. We got our fingers in absolutely everything. Someone close to the action knows. Someone close to the action reports to Global Wall Street. And this evening, we've got 7 slides for 7 days. One for each and every one of you, all my 7 listeners. So let's go. Here's something that I feel very strongly about. You need to focus, guys. If you find yourself distracted by the day-to-day news, the hour-to-hour news, the minute-by-minute news, turn it off. I've done that in the past. There's times during the global financial crisis, for instance, I didn't look at my portfolio for almost 2 months. I know what I'm like, and when I saw those losses, I knew if I kept looking at them, and if the losses were any more profound, I would do something stupid. I would sell and realize a loss on a company that I bought because I looked at the numbers and I understood the balance sheet, the value proposition, and I felt confident enough to invest in that company. So at some point you do have to just keep calm and ignore the macro. Remember, the feds, the politicians, they ain't going to let nothing too profoundly damaging happen to the U.S. economy. We may not like what they do, but nothing seriously is going to happen that bad. Oh, and boy, think about the politicians and what's going on. This is such a good one. Actually, I contributed this to the Telegram channel. It wasn't my creation. It was right off Drudge Report, which I look at every morning. And it was a picture with a headline underneath that they did. And yeah, look at Mr. Powell. Boy, he done screwed up, as we say. And what's he going to do? You know, he kept increasing interest rates until something broke, and something always breaks when the Fed increases interest rates. Something broke. What's he going to do now? Of course, we would like to think that Silicon Valley Bank was unique, that it was one of a kind, but sadly, if you look at this list, if you look at what went on with SVB, and there were a bunch of yokels, a bunch of clowns. I'm so sorry about that. As their deposits surged, and I did a presentation for my banking clients last week about this, and I've got a good grasp on it. And their deposits surged from 2019 to 2021 by well over 200%, almost 300%. What did they do? Did they lower interest rates to deter depositors? No. Did they refuse to accept deposits like some banks do? No. Instead, the idiots took the money and they invested in fixed income assets. Some T-bills, yes, but most of it was in mortgage-backed securities. And what happens to the value of fixed income assets as interest rates rise? They go down. Keep in mind, SVB didn't even have a chief risk officer for 8 months. Might be different with these other institutions, who knows? I've been looking at the balance sheets. I'm not going to tell you what I've seen, but yeah, I say it in the headline without saying it. A second helping, there's plenty to come. So yeah, you got to be extremely careful about that, guys. Really, just be extremely careful about where you're putting your money, how you're deploying your capital. And this is an interesting one because Gary Gensler took office at a certain date and time. Nice arrow. I didn't do this slide, and I can't remember who contributed it to the Telegram channel, but it's very, because we get so much traffic on that channel. It's amazing. We're talking dozens of graphics, every hour, and it really adds up over the course of a day. And here's where Gary Gensler took office, and here we see what's going on with dark pool trading. And for those of you who don't know, dark pools are essentially what I call secret stock markets. They're pools of liquidity. They're maintained by big investment banks and other entities like that, brokerages. And it's for entities, I should say, who want to trade big blocks of stock without attracting attention. They can trade through these dark pools. Now, I don't like them at all because they distort price discovery in the public markets, and it's a parallel market. And these guys literally could dump huge blocks of stock into the public market that they've acquired slowly through a dark pool. But regardless, we see that what happened when Gensler came in, for some reason, trading in dark pools has soared. And that's troublesome. That's really weird. But regardless, when you focus on investing, no matter what you do, make sure you focus. Guys, I have to admit, I've got the opposite problem here. You can see the 3 people, and you probably recognize this internet meme. The investor, Bitcoin appears shocked. Gold is really soaring. I have to admit, I didn't pay attention to gold until I saw this meme on Friday on the channel. Then I looked at gold and I was like, oh my God, look at this. Yeah, I was watching Bitcoin. I'm fascinated by Bitcoin pushing above 27,000. Still am. But regardless, however you focus. Oh, and I'm not sure if you're aware, but this meme has been around for a long, long time. And about 2, maybe 3 years ago, it came out that these 3 people are all professional models, and they were hired by a photographer who took about 30 pictures on the day, all sorts of different positions and poses of these 3 people. And they were trying to set up something that would become a meme on its own, and they succeeded. And all I'll say, take a look at it, guys. Try to Google it up. If you're stuck, DM me and I can find it for you. All I'll say is that this was done. The original pictures were taken, about 20 years ago. And, age has been very kind to one of the 3, not the other 2. One of the young ladies, the guy, age has not been kind. So look it up and see who aged well and who didn't age well. It's actually pretty interesting. But regardless, we know that this time was made for Bitcoin, or I should reverse it. Bitcoin was made for this time. Banking chaos. Bitcoin emerged from the global financial crisis, 2008, 2009. And you can read in the Genesis block one of the first transactions that was done by Satoshi Nakamoto, where he commented on a bailout for the banks. So Bitcoin was made for times like this. I'm not surprised that Bitcoin is surging, because it does offer a safe haven in many ways for your assets. Look at what's going on with the Fed right now. They're starting to inflate their balance sheet again. They were trying to increase interest rates and engage in quantitative tapering. No. They've sharply increased the size of their balance sheet over the past week. It's mind-boggling what they've done. And this gets back to fiat currency and this idea that fiat currency steals while Bitcoin gives it back. We're calling it energy here. But think about how fiat currencies are devalued by the actions of the Fed, by the instructions the self-serving politicians give the regulatory officials in the central bank. The dollar is losing value in a very profound way. There's a reason why property is doing really well, why gold is doing really well, why Bitcoin is doing really well. That's all here, guys. All right, guys, that's it. I hope you have a wonderful week coming up. It's going to be a very profitable opportunity. If you're not in the markets, get in the markets. Fortunes are made during periods like this, I'm telling you. And as I said, I'm so tempted, I'm going to start to deploy some of my own liquidity into the market, not just dividends like I've been doing for forever. I think for about 10 years, actually. I can't recall the last time I deployed my own capital in the markets. So get into the markets, guys. And if you don't own any Bitcoin, shame on you. I've been buying Bitcoin every Friday for years. Start now. I also buy Ripple. A little bit different value proposition. But if you ain't got no crypto, take a look at Bitcoin first. That's it, guys. Take care. Have a good week. Oh, nice tune.